Alrighty, welcome back to the channel of Truth, Trust and Transparency. Today, there's no surprises. We've got another one of your questions straight from my Instagram inbox. Before we go there though, I have an exciting announcement. Guys, we're in the 500s. We have 500, at the time of making this video, 592 subscribers to go to reach my 2,500 subscriber goal. I'm trying to reach that by the end of the year. Benny, one of my frequent commenters, mentioned that I need to hit, I think, 10 people a day, 10 new subscribers. Seems like an awful lot. So if you can share this with someone, or if you've been following my content for a long time, maybe you haven't subscribed, would appreciate if you can hit that. We're almost there, guys. Really excited about that. Now, this looks a little bit messy, but let me explain it. A guy called Glen P has written in and he said, "Hi Davey, I really enjoy your YouTube content. I would like your thoughts and recommendations on our situation. I'm 48 years old and would like to retire the day I turn 60. Wouldn't we all, Glenn? Our PPR is valued at 1.3 mil with 330 grand owing and 200k sitting in offset. Recently purchased first IP on a corner block with my sister, purchased for 660k in Adelaide's northern suburbs, which we are currently renovating heavily, including partial demos, second family room, bedroom number 4. We're subdividing the land, we're building a 4-bedroom house on the other half, 100k PPO, 100k of the PPR equity has been used for that, and another 250k is going to be used on the new build, leaving me 426k of usable equity. You and I have different numbers because I calculate 350. Our combined income is 270k per annum. And here's the kicker, $770,000 sitting in super. Glenn, you've worked your ass off at 48 years old. Congratulations. That's a friggin' big amount. We appreciate your time and efforts put into your videos. Now, always, as usual, guys, you'd be getting sick of this by now, but not financial advice. I'm not a financial advisor. I'm not a mortgage broker. I'm not an accountant. So take what you've learned from this video and these learnings and go ask the people that are qualified and licensed to give you financial advice, because it's not me. But you asked me a question, I like to run the numbers, show you what's possible. 770k is big poppers. Congratulations on that. Now, what you can do with that, Glenn, quite comfortably, and as you would have seen in a video a day or two ago, all the videos are starting to blur into one. We can go out and make 20% deposits, which is 150 grand, and some stamp duty and some other costs, and easily go out tomorrow and use that money to buy 3 $750,000 properties. We're going to hold those properties for 12 years. I estimate them being worth about $1.6 million each. To acquire each of those properties, we have a cost base of $830,000. Now that's buying price, stamp duty, bit of selling price on the other side, meaning we've made a $770,000 gain. Now you would need to receive some advice from an accountant or potentially financial advisor. A really good one to listen to is, we had James Wrigley on the Everything Property podcast. Technically sort of like this week / last week. Go have a listen to that one. Some really interesting ideas on there. However, you may or may not, and the gain that you make may or may not be taxed depending on a few circumstances and when you do sell it, if you are at that retirement age, if you qualify for concessions. At the worst case scenario, and I might actually change this and I might do worst case scenario because I'm conservative like that. You have made a gain of 770 times it by 3. You've made a gain of 2.3 mil, $2.31 million, right? Now, let's just say that you've got to pay your 15% tax on that. Worst case scenario, you've got to pay 346k 500 in tax, leaving you, you know what, I'll just call it round figures, 2 mil. What you've also been able to do at a $270,000 salary, you and your partner combined, making 12% contributions, you've added about $388,000. Now, I've rounded the two up, 2 million in cash, 388, maybe with some leftovers that we haven't yet made. And we've got $2.5 million sitting in there. The good thing about that is that $2.5 million, we go out and buy one commercial. We know that there might be some vacancy risk, but if we don't have a mortgage attached to it, we don't have the stress of trying to meet the loan repayments. So that's why we buy it in full, and you're retired anyway. 2.5 mil at 6% is going to bring in 150K. If you find a decent commercial that's 7%, it's 175 grand. 175K. Yours to keep in retirement. There you go. There's one. There's the superannuation option. Now you can take the foot off the pedal, save a bit, keep a bit, but to be honest, we want to maximize that value. 2 million through the use of property, 388K via your contributions, 150K to 170K. Now, let's go and talk about the PPR and what you're doing with your sister. Now, I've personally had this in my portfolio, and my suggestion would be, and I know you probably love your sister, Glen, you want to help her out. You know, we always want to help our siblings out. It just gets really, really, really tricky when you're doing these things with your sister. For example, you're contributing that equity, right? You know, is she doing the same? Is it all 50-50? What is the plan? You know, with siblings, you know, you can have the right intention at the moment, but, you know, your sibling is living a totally different life with their partner, and sometimes you can go in opposite directions. So I think, and my suggestion probably would be finish the project with your sister. It sounds like you may potentially be overcapitalizing on renos, so don't go too hard. Remember, what is just going to get you a good resale price. You know, we don't need to be adding things just because look and feel, and because you're using this, I want you to be using that. Anyway, now I say 1.3 mil minus, let's do the numbers. So if I'm wrong on air, I'll accept it. I'm a human, I can be wrong. 1.3 mil, I do 80% of that. That's what we can loan up to, $1,040,000. I minus, Glen, your debt of 330K against the mortgage, meaning we have usable equity of 710. You've told me you've used 250 for the build, or going to use 250 for the build, and 100 grand for that IP. It tells me you have 350K less. Now, you've also got 200K sitting in cash, which is good. We need that. So you've got 550 grand total. Now, what I would potentially go out and do is I'd look to acquire 4 properties, and we're looking at about a $600,000 purchase price each. And I'll break down the numbers on one, and then we can obviously repeat that 4 times. But Glen, we're looking to do a minimum of a 12% deposit. Why? When we do 12%, the LMI amount that we have to pay to the bank drops down significantly compared to 10%, and it's only an extra 2%. It's not much money. So we'd have 528K worth of debt. That repayments on that at 5.5% currently would be $29,000 a year. We know that there's about $10,000 worth of other costs. It would cost you $39,000. If we we try to target near and at a 5% yield, 30 grand a year, meaning they'll cost you about 9K per year. Now, we can maybe use a little bit more in deposits, but my thinking goes like this. If we've got $30,000 a year rental income by 4, we've got 120 grand. I plus that on your $270,000 income, and I get 390 grand. I times that by, say, 5 for borrowing power, working out, and I don't know if there's any other debts or anything like that, so I'm obviously just making some assumptions, but I'm getting about $1.9 million, $1.95 million worth of debt. So if I'm buying at 528 a pop, and I'm timesing that by 4, I'm at 2.1 mil. So if I go, it's somewhere between 5 to 6, that multiply, and it's going to depend on obviously banks. So we might need to go down second and third tier, but I actually think it's quite possible. You know, we might need to tip into 15% deposits to bring that loan amount down. Again, let's work it out live on air. If we had $600,000 and we tipped in $90,000 510 by 4 is we're at 2,040,000. So we're within 50 grand. So that tells me that that's probably workable and doable. Originally, I had only 3, but once I did 12 years, and we'll get to this stage here, you know, they're worth about 1.3 mil in 12 years' time. Our cost base is about 675K, so that's the purchase price plus stamp duty plus selling costs, meaning we've made a capital gain of 625K. We've got to pay our tax, which is 140 grand, meaning each property we're profiting 485, but we're not going to sell all of them. Now, when I only had 3 and I sold 1, I could only get sort of a granny flat on each, but then I'd still have the debt. And I thought, can we push it? Went back through the numbers. I thought we can push it. We get a 4th in there. We get a 4th one in there. What does that mean? We sell off 2, right? We sell off 2 for 485 grand. Now, let's not forget, you're also on $270,000 a year. So what I've done up here and said, if Glenn, you and your partner, or I don't know if it's yourself, if you can save at least 20% of that 270 grand, over 12 years, you'll actually save $648,000, which is a lot of money. So we're putting that in the offsets against this account. I've tweaked it down to 20% because I know that these are negatively geared. But once you get to sort of that threshold, you're able to save, you know, if you can cap your lifestyle expenses, you're able to save a lot more of that money. So conservatively, I said 20%. It's not too bad. You'll save 648. The good thing is you'll sell off 2 properties and you'll make 485 grand, right? Meaning you'll have $1.6 million in cash after you've sold 2. You'll have 2 properties remaining and the debt levels will be 528 and 528 equals $1,056,000. But wait, there's more. I'd also go on and I'd add an extra 400K for 2 granny flats on the back of those. You can even say the granny flats go up to 250 grand if I'm a buyer's agent and I'm charging my clients an arm and a leg to build them. If you know, you know. So say it goes up to 500K. By the way, guys, I interviewed the biggest granny flat builder in Australia and theirs started at 160 grand. So do your research and save your freaking money. Anyway, that's 1.55 mil. I just said I had 1.6, so I've got a bit of a buffer there. What I would then do, and let's work it out with me. I then have 2. So the numbers on one of these properties, if it is leasing at say 4%, 1.3 mil property, let's say it's at 4%, 52 grand. That's going to be bringing in 52K, right? That property is going to be bringing in 52K. Again, minus 10 grand worth of expenses. But then we're going to have a granny flat. So we went for 42K, plus we've got the granny flat rent, which is about 30 grand. Now, the granny flat's not going to have those costs because we've got the depreciation, which means we've got $72,000, 72K per dwelling. Let's add this together, which means we have $144,000 from those 2 assets and 4 rental incomes, plus between 150 to 175K in super. So, Glenn, my friend, that's how you can easily retire. Well, not easy, there's a bit of work to do, but 294K to 294K plus. 4 properties, sell 2, granny flats, pay off the rest of the debt, 3 in super, sell down 1 commercial. And then guess what? You're bringing in 300K a year. That is also going to increase as rent increases. Same with your commercial. But you've done it with 3 properties. Okay, you've got maybe 2 granny flats, call it 5. But this is what I'm saying, guys. You do it right. You can argue that I'm out or I've rounded up, I've rounded down, but am I out that much? It's only 5 properties that you need here. 2 properties paid outright, 2 granny flats, call it 2, call it 4, either or. 1 property in super. 5 properties, or 3, depending addresses, how you want to label it. 300K. Glenn, I don't know what you do for hobbies, but that's a pretty comfy retirement if I don't say so myself, especially in only 12 years' time. Guys, it's been a pleasure. I appreciate it. Keep sending in your questions. If I don't reply to you straight away, just know that I've probably read it and I'm just going to schedule it. Some of these guys have written in 1 to 2 weeks ago and I come back through and I try to get to everyone. Best place to send it, Instagram DM at Davey Hamilton. Send it to me there and I'll get back to you. It might be 1, 2, 3, 4 weeks. I'll try to get back to you this year, but Glenn, that's what I have to think about, not financial advice at all, but something that I would do with those sorts of numbers. Again, value from today. Would appreciate it if you subscribed. If not, I'm going to still show up tomorrow. So I'll see you guys then.